Welcome to Galaxy Brains, the weekly podcast from Galaxy Research. Yo, this beat hurts, but it works, and I've got a heat verse. Yo, it's no joke, even though I'm laughing, smiling, engulfed in orange smoke like Manhattan Island. When I'm rhyming wild, my enemies are helpless. I redefine the game, don't just play the hand we're dealt with. I know you might not hear me, but I know you must have felt this. Speak against the power like my name was Ryan Selkis. Catch me down on Wall Street in Ferragamo kicks. Hit and drop shots, haters better run quick. Y'all don't run ish, yo, the future is distributed. And if you talk slick, yo, you get the drop kick. See me clap back, cop coin on Cash App, and a Bitcoin snapback ain't nothing to laugh at, so line up. Yo, we're stepping on the court and your time's up. We ain't playing for sport here on Galaxy Brains. As always, I'm your host, Alex Thorne, head of firm-wide research at Galaxy Digital. Thank you for listening to Galaxy Brains. We have a great show. Ryan Selkis, CEO, founder of Messari, and now chairman and founder of the Digital Freedom Alliance. He is our guest. Great conversation with Ryan about the current and future state of crypto policy and regulation in the United States. We have a lot that we cover in that conversation. I know you'll like it. And of course, we'll check in with our good friend Beimnet Abebe from Galaxy Trading, as always, to talk markets and macro. But before we get to all of that, I need to remind you to please refer to the link to the disclaimer in the podcast notes and note that none of the information contained in this podcast represents an offer, recommendation, solicitation, or investment advice from Galaxy Digital or any of its affiliates to buy or sell any securities. Man, this is a big week and this is a big episode, so let's hop right into it. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, welcome to the show, Bim.
Thanks for having me.
So obviously the big stories of this week has been the regulatory actions, the civil suits brought by the SEC against Coinbase and Binance. So let's just start right there. Any impact on markets?
Bitcoin is currently trading at 26,610. It was trading basically 27,000 before the announcement came out. While I think there are very meaningful implications for the broader industry.
Of course.
For Bitcoin in particular, I don't think there was any implications.
Yeah, down a tiny bit, right?
Down a tiny bit, but these cases ultimately don't really impact things that are commodities
specifically
that we know
Bitcoin.
Are specifically commodities. And so Bitcoin trades well. Anecdotally, most of the folks we talk to, they were really impressed by the fact that Bitcoin held up so well.
Yeah.
And like the macro types we talk through, there's generally like a sort of an apathetic sort of kind of view about it. Most folks have a bag. They've properly sized it in their portfolio given, the volatility, and then nobody's scrambling to add more, but nobody's like trying to sell either. Yeah. And so that's why, Bitcoin has just kind of hovered where it's been hovering, for the past several months. And so, I think it's quite healthy to see, a very resilient asset like this. It's still up, more than 50% on the year, still one of the best performing asset classes. It's liquid, it's legal. Yeah. And so, there's a lot of, positive cross currents for Bitcoin. In addition, you've definitely seen some selling of alts, particularly those named in the suits. And generally speaking, when you have a risk-off move in crypto, folks, sell alts and rotate into Bitcoin. When folks are worried about balances on exchange or et cetera, again, it's Bitcoin into cold storage. Yep. And so, Bitcoin definitely benefits from a flight to quality phenomenon in crypto on a relative basis. And so I think that partially explains, some of the resilience behind it. In addition, it's really a market that trades at max pain right now. And so, folks that short at bad levels, 9 times out of 10 will get squeezed. And, that might have to do with how the market makers operate or whatever. But it is a market that kind of does trade to max pain. In addition, you just kind of think about, this asset, over Memorial Day weekend, you basically went up to 28,500 from similar levels to now.
Yeah, for no real reason.
For no real reason.
It
was just like a short squeeze.
Yeah.
And so, I think this is an asset class that's probably likely going to remain relatively range bound. Basically everything has been thrown at Bitcoin, collapses of Three Arrows, FTX. Now you got, the regulatory stuff, the cases. 500 plus basis points of hiking, domestically and all tight financial conditions everywhere around the globe, etc. And this thing is still holding up really well. And I think, taking a step back, I think that bodes well for the long run future of this asset and the asset class in general. The fact that it's holding up so well in the context of the world's most important government and regulatory agency kind of, clamping down on things. And so I'm optimistic. In addition, I do think that the macro will eventually start to be supportive of things like, Bitcoin and precious metals and hedges against monetary debasement.
Yeah.
To be honest, I thought the biggest news over the past month was the fact that we raised the debt ceiling indefinitely, to a specific time, but no cap in theory. And we are going to spend money recklessly without abandon, for the next couple of years. And, so is every other, G10 economy.
Yeah.
And I mean, the monetary argument, it becomes apparent every day. It's like one of those things where it's like, wait, our debt goes up every day, and it's like we got to pay interest on it, and your ability to pay back that reduces every single day. Every day Bitcoin's around, more credible, more participants, more adoption, and so it's one of those things that you just need to give it time. And I mean, I wish I could fast forward 4 years and tell you where Bitcoin's going to be, but I feel pretty confident in saying that, it'll be around. There'll be tons of folks transacting in it in novel ways, potentially, ordinals, whatever it may be. But the monetary argument is only going to have gotten much, much stronger in 4 years' time. I can tell you that for sure.
That was great. Love the overview, Bim, and I totally agree. Let me just shift gears. We'll do one little question here, though it's not a little question, but before we wrap, because sort of in our long line of periodic things that I've asked Beimnet Abebe about as I'm learning macro myself. One was that I saw Balaji Srinivasan, who's the former CTO at Coinbase separately, and an entrepreneur. And he's also the guy, right? He had the $1 million price call, which of course didn't happen for Bitcoin.
Clearly doesn't know how to price options.
Yeah, exactly. But he tweeted a chart that I believe that what the chart said was that it has been 14 consecutive months in a row where non-farm payrolls have beaten expectations or not beaten.
Have beaten
expectations, and that's like by far the longest streak ever. And essentially was suggesting that the BLS data is raw, fake, or manipulated.
Yeah.
People have said that in the past. I found a tweet from 2011 where Jack Welch, the former CEO of General Motors, or GE, whichever, the owner of GM or whatever, Jack Welch, famous corporate guy, he said the same thing about the BLS data back then. Is that possible?
I'll say more and more serious folks that have looked at this data for, decades, are highlighting that there's some abnormalities for sure. There's some things that stick out. And 14 months of consecutive upward beats is very surprising. However, it's not in the context of like what we know about the labor market. It is really hot.
Right. So the broad trend is like you wouldn't disagree with that.
It's accurate. Yeah. And so, one, I'd like to stress that non-farm payrolls is one piece of data, right? There are tons of other data pieces to properly contextualize the U.S. labor market. The ADP payroll data,
right,
that is, a private data series that produced by, one of the largest payroll processing companies, right, still supports, these massive job gains.
Right.
Like they're saying they're adding like hundreds of thousands of jobs as well. And, sort of like the employment components of PMIs and all of these surveys and, NFIB data, et cetera. Like, and you can see it in high frequency data too, like MTA travel and right, like in Memorial Day, you had more planes in the sky than ever.
Yeah.
Right. And so there are ways to properly contextualize the data. With that being said, this data smells funky. For sure.
Something wrong with that PLS data. But it's directionally telling you the same thing all the other trustworthy data is saying, to your point.
Fair enough.
Yeah.
The weird part about this, though, is like for the past 2 months, you've had a very high adjustment in this thing known as like death birth component, which is like I believe estimates like how many like net new jobs were created as a function of like a business starting versus like a business going out of business. And so like there are weird things like that in the data that have thrown it off, for the past couple of months. And so, yeah, like I'm like looking at it with a grain of salt. And I think a lot of serious people are looking at it with a grain of salt. However, it's just important to stress that it's not our only measure.
Yeah.
And realistically, it's not even it's not the main priority for the central bank right now.
Right.
The central priority is inflation, getting inflation down.
Yep.
And on Tuesday, you've got core CPI that's expected to print at 0.4 month on month. You've had the Royal Bank, the RBA, the Bank of Canada surprise hike over the past week. Right, because inflation's been too high and data's been too strong in general, and so you're dealing with a Fed that has really no choice but to keep going until prices come down. However, I do think that the committee is as split as they've ever been in this hiking cycle. There are more divergent opinions. In addition, I do think that there are pockets of weak data that are now starting to sort of materialize. In addition, I think the supply outlook for treasuries is going to be a much more important factor, especially over the next 3 to 4 months as the treasury's general account builds. But high level, like we're going to need to fund a lot of U.S. debt, and that money has to come from somewhere. It's either RRP or bank reserves.
Yep.
And most likely a lot of it's going to come from bank reserves. A decent amount will come from RRP, but that's going to be a liquidity drain on the market, and there's going to have to be a lot of treasury supply that gets absorbed by the market, and you're going to take reserves down in the broader market to very like tight levels.
Yep.
And eventually that's going to catch up to the Fed, and I think they're thinking about it now, as to when they might have to ultimately stop doing QT. And not necessarily do QE,
but at least
stop the
tightening,
stop the tightening, etc. When they'll have a serious issue with banks, and they'll have to try to re-steepen the yield curve, etc. And so the Fed's got visibility into that. However, the data, especially the price data, has just been so strong recently that it's tough to even want to think about that.
People are going to go out and spend money over the summer too, right? People want to get outside and spend money, go to baseball games and whatnot, buy hot dogs, whatever Americans do, right?
I hate hot dogs and I think baseball is boring, but
you're probably going to spend some money this summer?
Yeah, I'm ready. I'm ready to hit the beach.
Yeah, let's go. Hey, Beimnet Abebe from Galaxy Trading, my friend, as always. Great to see you.
Pleasure.
Let's go to our guest, Ryan Selkis, CEO, founder of Messari, one of the oldest and biggest data and research companies in crypto. Ryan, thank you so much for joining Galaxy Brains.
Thank you, and thank you for the rap intro.
Yeah,
I feel
dude,
cool.
That's a banger. So, been wanting to talk to you, Ryan, for a while. I've followed and we've known each other for a fair amount of time, but things have really gotten interesting. You've become very vocal on regulation, sort of as the regulatory screws have been being tightened by various agencies and stuff over the last year or so in particular. We're going to get into all of that. Along those lines, though, you just announced this week the launch of a new nonprofit, the Digital Freedom Alliance. You are founder and chairman of this of the DFA. Tell us what that is.
In short, it's a grassroots advocacy group to basically work on messaging, activation, and narrative development for the industry. We really lack a PR or marketing apparatus for the space, and one of the reasons is a decentralized community. It's tough to have a single standard bearer or a single narrative, but there are some common threads that I think the entire community holds as core values that we really just do a poor job of communicating, particularly to DC.
Yeah.
So we're really focused on resetting the narrative in DC on crypto, what it's used for, what its potential is, combating just bad faith attacks on the industry and its good faith proponents and builders, and taking a data and research driven approach to what it's going to take to pass positive legislation, common sense legislation that allows the industry to thrive with some consumer protections and market structure rules in place, but that just gets us out of this regulatory morass where one unelected bureaucrat is able to steamroll an entire movement.
Yeah, it's definitely a morass. I think that's the right word for it. That word, I don't know if this comes from, it really sounds like molasses to me, and like there's an onomatopoeia aspect to it where it's a slog, it's a sticky sludge, right, where we're stuck. So I don't know. That's just an aside. So Ryan, for our audience may not know, one of the things Ryan's been thinking a lot about market structure, right, and things like exchanges for a long time. One of the things Ryan was known for early was sort of blowing the whistle or sounding the alarm on Mount Gox. I guess almost 10 years. Was it 10 years ago at this point? Probably. Is there a line from there to here? Like, is that how long you've been thinking about these issues? Because I also know one of Messari's early goals was also around disclosures, and so tell us like your story and how it gets you from even Gox to now. Like, is this all part of the same thing you've been trying to build in crypto?
I think the through line is that I have a very low tolerance for bullshit. And I've called balls and strikes for a long time and haven't always been popular at the time that I've called them within different communities. But I think one of the reasons I've been around for so long and still have more than a few friends in the space is because people always know where I stand at any given time. And it's almost always on the line of what is good for the long term of crypto is good, for the long term for society and for, the country, in the case of the US and the fight that we're taking on now. I think with Mt. Gox, there was a bunch of folks that realized that the exchange, was in trouble, even months before it actually went under and before there was this, infamous bankruptcy document that I got my hands on. But at the time, Mt. Gox was trying to keep things, under the radar and kind of sweep this under the rug. And they had this whole crisis strategy plan for essentially obfuscating the fact that they were insolvent to their end users and slow playing kind of the communications plan for how they were going to restart the exchange. And there's a bunch of like early investors, early insiders that didn't really know what to do with this information because they were either under NDA or they were afraid that if they blew the whistle that they were going to get embroiled in some litigation or have something blow back on them. Mm-hmm. And I was a couple months into the quote unquote industry at that point. It was just Bitcoin. It was, like hundreds or thousands of us at the time versus
there were dozens of us.
Now. Yeah, dozens.
Yeah.
And, you'll kind of see this as the through line, but that was kind of the first emperor has no clothes moment where in many cases, I'm the only one dumb enough, fine line between being dumb and brave, I guess, but dumb enough to basically blow the whistle and say, like, this exchange that's a massive part of the market infrastructure is insolvent to the tune of, 700, 800,000 Bitcoin, whatever it was at the time. So just that at the time was catastrophic. And that's happened at numerous times, over the years, whether it's talking about ICOs, whether it's talking about the dynamics of Ripple and XRP and how they release that currency over time, whether it was talking about the early ICO movements and some of the excesses there, and then in the other direction on the regulatory state, right? So it's not just a partisan issue. I was very vocal about the Trump administration, in particular what Steve Mnuchin was trying to do at the 11th hour before the Trump administration was out of office in January of 2021, in cracking down on private transactions and really having some of these owners potential restrictions on payments, and then of course over the summer of 2021 with the infrastructure bill's passage, that's when I think I and a lot of others woke up to just how badly we were going to get slapped around under this administration. So I usually look crazy at the time talking about a lot of things, but my mind is built different, and I guess I don't have the same wiring for self-preservation as many others do. But when I tend to see something that is hiding in plain sight and is just so obvious, but people are afraid to call it what it is or tell the truth, that's traditionally been the type of controversial situations that I find myself in, where they're called controversial, but it's really just one person seeing a plain truth and saying this is bullshit. Yeah. More people need to start saying that this is so, and then more often than not, I've been on the right side of that snowball. So I view this as just the latest, incarnation, what we're doing with Digital Freedom Alliance. I've been banging the drum on the regulatory excesses, the bad faith of this administration in particular for 2 years. And only, more recently, have people, whether you're a hardcore progressive, conservative, or anywhere in between, said, we have to be like fighting this ruthlessly at this point, because this is about it's an existential level crisis for the industry in the U.S. So we'll see if it's too little too late, but I'm obviously very optimistic because I've just spent a lot of time, more than I wanted to in DC the last couple of years for sure. But I don't feel like we're non-participating characters right now. I think that there is a needle that we can thread to get good legislative outcomes, to curb the excesses and really marginalize people like Gary Gensler and the other out of control regulators. And then come 2024 election and 2025, we could find ourselves in a situation as an industry where we have clear guidance on how do stable coins get regulated, how are banking relationships ensured and preserved between crypto and non-crypto companies, how are crypto exchanges and custodians and these kind of market structure, critical market structure players regulated, and how are consumers protected, and how do we kind of abide by the spirit of all these existing financial laws that we have on the books. And then, definitionally, how do we actually think about how to bring decentralized networks and protocols to market and allow creators and some of these upstart use cases to thrive.
Yep.
So I've been called a tragic optimist by my friends, or a realistic pessimist, or whatever framing you want. But I do think there is so much potential for crypto, and if folks are just courageous enough, I think, to just be clear-eyed about the good, bad, and ugly of where we are right now, and just really fucking focus on the task at hand for the next 18 months, I think that we'll come out the other side stronger. But it's, success is not a foregone conclusion. It's certainly not a straight line. It never has been in crypto, but it's also not a foregone conclusion. So I think about the next 18 months as the battle for the US, after which point we're either going to have a really vibrant ecosystem, or, it's going to be time to move abroad.
Yeah. Yeah. When you look at the other, it's not just, niche countries that are taking progressive frameworks to the next level in crypto. It's the European Union. It's the United Kingdom, right? It's Brazil. It's Hong Kong, even to an extent now, right? So, and then you have China. There was it was like a science and technology wing of some part of the apparatus put out that Web3 paper, right? Like last week or whatever, which was, I'm told by China watchers much smarter than I, that it is notable that it was allowed. It may not mean that it's their new policy, but that it wouldn't have even been allowed to have been published maybe a year ago. Mm-hmm. So we are I think it's very clear, we can as a country say and do whatever we want with crypto, but that isn't going to change the fact that around the world, many jurisdictions are treating it like, and building for it like it's the future of finance.
Yeah, I mean, that's right. I mean, I think there is a contingent within this administration and the financial regulators in particular that they're so certain of their position and the US's position that they're scoffing at the idea that some of this innovation could move abroad, or that it would even be a negative thing if it did move abroad. Right. I think that the false certainty that some of the financial regulators have that the U.S. is the dominant financial market, has the reserve currency, is the leader in tech, that it will always be so.
Yeah.
And I think historically that's been a very dangerous line of thinking for any incumbent when you're talking about transformative technology. And I don't think that crypto is going to be any different. I don't think AI is going to be any different. So we have to have smarter regulators and more competent regulators than we do. And we have to have more engaged lawmakers than we currently have in when it comes to crypto. So I think there are positive steps in that direction on the legislative side, but we're in an all-out trench war right now against one out of control bureaucrat in particular, arguably two if you count the FDIC chair as well. But that's just going to be the ground reality for the next 6, 12, 18 months, especially until we see some court rulings in some of these big cases like Ripples and Grayscales.
Yeah, let's talk a few specifics. Let's talk about some of these cases. Obviously, this week we had lawsuits filed against Binance and Coinbase by the SEC. I would say, just on my first look, very, very different lawsuits, right? I mean, for example, CZ is a named defendant and mentioned by name maybe 190 times in the Binance suit, which also, in addition to lack of registration allegations, contains allegations of fraud and misappropriation and commingling. The Coinbase suit, Brian Armstrong is not named, and he's only mentioned once in the entire suit. Of course, it's just as the CEO of Coinbase. And it's solely about lack of registration. So it is a much different tone and vibe, but I think the Coinbase one is much more important long run for the industry in the U.S. I don't know what dropping these back-to-back days, like, I mean, is this going to have to get resolved in court? I don't really expect either firm to really settle at this point. I don't expect that. So yeah. I don't know. How do you think these play out? That's a big question, but what's your take on both the SEC bringing both of these and right at this time, and how do you think this ends for those cases?
Well, I think the SEC's basically got us in a chokehold as an industry in the U.S. right now, and we can break out of that chokehold only through the 2024 election, quite frankly, because the chilling effect that that these enforcement actions are going to have on the industry, and just the legal battles, one after the other, kind of the full weight of the state coming nonstop. Court cases just take time, right? And so we are unfortunately not going to have much forward momentum unless and until there is a bill that passes both chambers of Congress and is signed by this administration. And we might not love everything that's in it, but that is like one thing that we can work on proactively and stay engaged with as an industry. Or there's a change in leadership in the White House, right? Like I mean, I would like to say that there's another way, but I mean that is the situation that we're in. And so folks in the industry that are in any position of leadership, whether you're on the investing side, the market structure side, if you're a DeFi developer, a protocol developer, asset issuer, you really have no option but to engage in the McHenry-Thompson bill that dropped last Friday, that draft bill, and see if we can work out common sense language that hits all of the notes that need to be hit from a policy making standpoint, right? So you have adequate consumer protections, you close certain loopholes that might allow people to skirt around U.S. securities law. You create clear definitions for what does decentralization mean in practice. How are these systems governed? What are the rules for folks in the U.S. or participating in these ecosystems? That either gets done well and the drafts tightens up and we make some forward progress there, or everybody is just in a trench until 2024. And then at that point, it depends on who wins the White House. But I would say, depending on who wins the White House and what that administration looks like, you're talking about crypto existing in the U.S. or crypto not existing in the U.S. outside of maybe Bitcoin. I unfortunately, I truly think those are the stakes right now, and that's not to deliver like an anti-Biden White House message. I personally don't think that he is actually going to run for re-election at this point. The question is what happens in the chaos of Biden and Trump are the front runners right now, but no one thinks that they're going to be the two nominees. And so I think all the more reason for us to change sentiment and try to educate as many potential allies, as many potential contenders for the presidency on what we're actually doing and why it matters.
Brian, you mentioned Bitcoin. You think outside of Bitcoin, we think that there's nothing really in these suits, for example, that touches Bitcoin. It's the only one that Chair Gensler will publicly say is not a security. despite the fact that the CFTC has listed Ether futures as well. But the only one that Chair Gensler will say is not a security is Bitcoin. What do you say to Bitcoiners, online, for example, who say, why should we care about this? Bitcoin's going to be safe. Like, aren't they only coming after the altcoins? Like, what do you say to Bitcoiners who think that?
I think the Bitcoiners that are celebrating these enforcement actions tend to be later in the adoption curve and lower on the IQ spectrum than folks that actually know what's going on. I mean, they're cultists, right? They're coming in and they're thinking about Bitcoin, in religious terms. Nick Carter had a good, kind of mini thread on Twitter yesterday, and I think he was accurate to a T. I've been full-time working on general areas of infrastructure in Bitcoin and crypto for 10 years now. And when I go to a Bitcoin conference, I'm treated like a shitcoiner. And when I go to a crypto conference that's more broad than just Bitcoin, I'm treated like the resident like Bitcoin maximalist. And that's how I know I'm doing something right. And the truth is, most of my investments are in Bitcoin and Ethereum, right?
Right.
Well, Messari as a company does well when the entire asset class does well, because you don't really need a data and research platform if you're talking about one or two assets, right? Like
Right.
it's really when this is an asset class and when you're kind of building infrastructure that is Bloomberg but built on triple entry accounting rails, right? These blockchains, and being able to parse them and all the information and the new novel governance structures and everything associated with it. So I obviously have an incentive to see the asset class do well and to see this not just become a vassal of the SEC. And technology that is bastardized and made functionally just non-functional
Like neutered, basically.
It's neutered, but there's also you would essentially have to make the tech and the protocols worse, right? You'd have to implement software that makes them all worse,
right?
From a performance standpoint, from a governance standpoint, to abide by some securities laws.
That's
if you're
one
trying
of the
to just analogize them.
Yeah, obviously, you mentioned the midnight room liking at the end of the Trump administration from Secretary Mnuchin, right? That was the FinCEN rule that was going to, I think it was the slippery slope. It wasn't going to ban, quote unquote, unhosted wallets, but it was going to add a bunch of privacy destroying KYC type information requirements on exchanges about them. Obviously a slippery slope from that to just straight up banning unhosted wallets. Mm-hmm. I'm also sort of the opinion that the chair of the SEC ultimately wants to basically end self-custody as well, that he thinks that it should, like when he talks about disaggregating the functions of the crypto exchanges, right, such that custody and settlement and trading are separated. I think that's something most people like the idea of, right? We understand why it's like that in traditional finance, and it makes a lot of sense. However, I think what a subtext that I'm starting to pick up on from this is that what he really thinks will and should happen in that world is that the cryptos enter a qualified custodian and never leave. It mm-hmm. becomes like the DTCC, and there's a lot of problems with that. But one of the main sort of at the highest level, that's thinking about these purely as assets and not as instruments that actually power networks that need to actually be used, right? Like they have to be bearer assets because they actually are they're actual tokens in the generic sense to power the machines, right? Like you have to put them into the machine. You can't just trade a paper IOU of them. And by the way, if you do, then like you said about degrading the blockchain, that's what made me think of this. You basically have ended the blockchain. You've instead said, okay, let's just use a database for this thing. And it was really telling because the other day he basically said that. He said we don't need new money. We've got digital money. He referred to the automobile industry as like something. He had that crazy quote on CNBC, right? So like he actually I think does believe that you don't need public blockchains and that he actually wants to ring fence them and neuter their assets, right? And that's sort of what I'm hearing. That's sort of the subtext I'm getting from him lately.
Well, I think that's because there is a wing of the progressive movement that's all about control and basically, government surveillance and kind of the ability to control and watch every move that you make financially. Now they'll argue that that's not the case, and you'll hear things like national security and illicit commerce and all that always gets parroted and trumpeted from crypto's critics. We can't have these privacy preserving technologies because they might be used by bad guys.
Right.
Right. When the reality is the most dystopian future that you can imagine is a U.S. government that has total surveillance and control over your financial holdings. And it's not a huge leap of the imagination to see how this can go sideways. If you look at what happened with the Canadian truckers strike not too far north, just last year, the beginning of last year, and the way that people were being cut out of their financial system and unable to access their savings for dissenting, right? That is in a quote unquote democracy. And the authorities looked at crypto as a threat to their ability to basically run roughshod over civil liberties and at a moment's notice just cut people where it hurts the most in terms of cutting them off from their financial rails and their savings. I think we talk a lot about crypto building a parallel financial system, and the criticism on crypto historically has been you don't the financial system works pretty well in the U.S. and in developed economies, and it's the result of decades or even in some cases centuries of innovation. And the thing that I think we don't have a great narrative around as an industry is, well, it's a parallel financial system just in case everything that leadership in the Western democracies are doing, just in case you completely ruin the economy, which you've been doing a pretty good job of. If you look at deficit spending, no fiscal discipline, just runaway entitlement spending. At some point, it seems like everybody knows that things are going to come to a head at some point. I'm not speaking crazy thoughts here.
No.
Most of the big macro investors of the world kind of think this right now. So whether you call it the fourth turning or a sovereign debt crisis or a currency crisis, what have you, you don't have to look too far in history to know that is possible. Not only possible, but probable, and on a long enough timeline, inevitable. So what we're talking about when we think about a parallel financial system is a life raft, right? It's like an opt-out mechanism, not to undermine the US dollar or to undermine the existing financial system, but to make sure that if things go sideways or things get really bad, there is an alternative. And right now, this alternative is useful globally in markets that are already under significant stress. We've seen how prevalent crypto is in some South American countries, in some Southeast Asian countries, in any realm where you have high currency volatility, low trust in governments, and high potential for disruption or wealth confiscation. Crypto is already useful for certain marginalized classes of people as a financial technology, in those circumstances. And the question is, can we build robust enough infrastructure so that it can, crypto can sustain, hundreds of millions, billions of people that might face something similar in the future? I think the existing powers that be think about that, and they're terrified at the thought of, could you imagine the unwashed masses actually controlling their own finances and and controlling their own money without the beneficence of the federal government. It's they're just the folks in DC have just been rewired to just think of themselves as the ultimate saviors of the middle American family, and there's no concept for how far out of touch folks in DC are versus where I think most individuals are in the country when it comes to their ability to hold, let's just say cash, right? Hold cash, hold digital cash, hold gold, hold digital gold, whatever it is. That is really the nuts and bolts of what I think we're fighting for as an industry, and then everything else is downstream of that, right? So all the infrastructure that we're trying to defend, all of the new kind of novel use cases around crypto assets, not named Bitcoin, that aren't trying to be money. They're just trying to be, some combination of governance tokens, financial incentives, and kind of ownership tokens for some of these new platforms outside of a corporate structure. That's all kind of secondary and emerging and like novel tech that with the right guardrails could be hugely, promising and for many decades to come. But I come back to the core of, do you have the right to own your own money? Do you have the right to own, ones and zeros that are just accounting ledgers that aren't under the direct control of the US government or any governments? And to me, that is a very black and white issue that I think leaders in DC are not comfortable saying that they hate. And many of them do, right? Like, if you think about how crazy that is, that we've been able to meme into an existence a $1 trillion asset class based on ones and zeros, where the only real value behind it is distrust in the governments to do what's in the long-term best interest of the economy. That's insane. And like, you can understand why some of our leaders don't necessarily like it. But this is the area, I know I'm spending a lot of time on this one point, but I think this is the area where we have the strongest leg to stand on when we're talking about defending the industry, because I think most people would agree you have the right to hold cash, you have the right to hold and own your own assets without fear of seizures or unconstitutional surveillance from the state. And those are actually hard-coded in the Constitution, in the Bill of Rights, and are some of the laws that we have on our side today. If we can hold the line there, and if that is kind of our starting point for this conversation, then I think you solve 80, 90% of the public policy problem in the US. And then we're talking about the 10, 20%, which is all the innovative emerging use cases. How can you develop safe harbors? How can you make sure that we just don't have the same fraud, abuse, and shenanigans that we saw in the last couple of years on the token side of things, but at least give people the opportunity to also own their own, decentralized exchange tokens, their own decentralized like banking tokens, their own decentralized identity tokens, whatever it is, with their money being the first use case, but then all these other elements kind of following after that once the infrastructure is a little bit more mature.
I totally agree with your point, Ryan. I think that is the core, the first issue, right? Is the self-sovereign, the right to own your own money. And it does feel like the American government this is really exposing, I think, an authoritarian bent in American governance that I guess we didn't really, it wasn't obvious that it existed until this innovation, till Bitcoin was invented and released, that there actually was another way it could be done, right? I guess other than cash, you talk about cash as the example, right? But you can't hold your life savings in cash. I mean, it's too bulky, right? Like it's not practical. It's really exposing, though, the sort of, frankly, authoritarian nature of how the financial system works in the U.S., right? How it can be, there are all these pressure points and screws that authorities can use to totally change the course of one's life, right?
So I think those are the ability to just own your own assets, whether it's financial, your own data, whatever. I think is ground zero for all the conversations that we're having on the legal and regulatory side. And again, that is not something that we can take for granted as a given, because if you look at MiCA and what's coming out in the EU, there are likely going to be some restrictions on like how much you can self custody and what what you're able to do without kind of reporting to the government what you're transacting around. And I think you're going to have to make that debate in every jurisdiction. But in the U.S., at least, you have the Constitution on your side, and you have 250 years of history on your side with that debate. So I think when you extend further than that, the issue is different in the sense that you're not necessarily talking about constitutional issues, but you're still talking about the rule of law, right? No one in the industry wants to have this level of hostility with the financial regulators, right? No one in crypto in their right mind wants to just pick a fight with the SEC or the CFTC or the OCC or the FDIC. Like, no one wants to be in this position. On the flip side, there are zero Americans that are clamoring for perpetual confrontation between the government and businesses, and this like endless litigation environment that we're in between crypto startups, crypto innovators, and the regulators. No one is asking for it, but it's crazy to me that, and I think a couple of people have picked up on this, but we need to kind of shout into the megaphone, right? Like Matt Levine at Bloomberg, who's, I think maybe you'd agree, like the most brilliant financial writer like in the world. Right?
Money stuff. He writes every day. It's
money
high
stuff.
quality.
He writes every day.
He's often been quite, I think, quite intelligent on crypto and crypto policy.
He gets it at a very deep level.
I haven't always liked everything he's written, but he's good. He gets it.
But he does.
By the way, he writes every day. It's impressive. Money stuff is good.
He wrote an entire business week on crypto last fall that I encourage people should.
Yeah, that was his
incredible.
Yeah, it was like a 60-page of everything you need to know, quote unquote. It was very good.
It was phenomenal. It was plain English. But one of the things that he wrote last year was, Gensler says that he wants to regulate all of crypto, and all of crypto should be under the SEC's umbrella, and his strategy for regulating them is to ban them. So, we're going to have a fight because if the financial regulators and policymakers are saying, I can't believe that the crypto industry, whatever that means, first of all, but I can't believe that the crypto industry just, is so reckless and lawless and operating in this no man's land, and they're comfortable with the status quo, and I can't believe that they won't just listen to the guidance that we're giving as regulators and benevolent dictators, and then you say, wait a second, well, what they're really saying is, we would like you to just stop existing. Can you please just stop existing? Can you please just stop doing everything that you're doing, and then you'll be in compliance.
Then we'll be okay.
Right?
Then you'll be in compliance.
So that's insane, obviously. And I think we need to be better as an industry about telling that story and explaining, look, we know that these are the parameters of existing financial law, existing consumer protection law. Here's what we as an industry have been doing to try to advance that. Mm-hmm. And here are the gray areas, and here's where we'd like to work with policymakers, whether you're talking about the legislative process or rulemaking on the regulatory side. This is where we would really like to clear definitions up, make sure that there's sensible retrofitting of existing rules, existing frameworks and parameters, and let's make sure that wraps around crypto, understanding what the tech unlocks and some of the new edge cases that are unlocked associated with it. This is something, I truly believe this, Alex, you probably do too. Like, this is something where I think that if you took some rational staffers that understood the tech, that understood what we're trying to do technically in terms of making sure that this ecosystem can exist and thrive in the US, and you took even like the most rabid, like hardcore libertarians in the industry and some technologists that are working on these solutions at the exchanges, the custodians, or the protocol builders, and you put them in a room, you'd probably be able to come up with a framework that makes sense in a matter of a month. Mm-hmm. And the good news is, I think we have a draft of that now in like McHenry Thompson, and now it's, I think, incumbent on actual leaders in the industry to go and praise the parts that are sensible, that are fair, even if we don't love some of the restrictions. Go in, encourage the process, and then try to make this as technically feasible as possible, so that we are not just bitching about everything that comes our way, but actually understanding that, like, if we want this tech to succeed, if we want crypto to not just be this marginalized community going forward, then we're going to have to actually have some of these tough conversations and figure out what are the rules of the road look like if you're a centralized entity, if you're actually managing people's money, if you're if you stand to benefit financially from a massive airdrop or a massive token issuance, what are the rules for those folks? And it's just like every other debate in the country where you'll have like the 10% of like hardcore progressives and authoritarians are like, no, screw these guys, let's ban it. And then you'll have like the 10% of like crypto libertarians are like, let's just build this, throw sand in the gears, and then wait for the U.S. to implode. And then, and then everything will like kind of magically
hyper-Bitcoinization will come, and we won't have to solve any of these problems.
And then, but then you've got 80% of folks in the middle. They're like, can we just like flesh something out that's sensible and reasonable? And like we're going to bitch about the compliance burden. We're going to bitch about the disclosures burden and argue about whether accredited investor laws are a good thing or just completely antiquated system, which they are, but we're not going to change that rule in the U.S. If we can just kind of get over that hurdle, I think we can eke out some progress the next 18 months.
Yep.
But the status quo isn't an option. Like it's
Right.
we're gonna lose oxygen soon if we don't start playing ball.
No, I agree. We're like you said, we're in the morass of the court. We've got the courts, so we've got nothing but the courts happening right now, right? And that's expensive. It's slow. It also, I tell people, somebody was asking me about SEC grayscale, and I was like, they're like, so if the SEC loses, like that means grayscale will get approved? I was like, oh, no, it doesn't mean that. In fact, it might not even, like, it's like the problem with the legal system, not the problem, an interesting sort of problem is that the judgments can be extremely narrow or on technicalities or, right? Like there's a way where the SEC loses but like grayscale doesn't really win. You know what I mean? Like,
Yep.
and that's very possible, if not even likely in a lot of these cases. So even if we spend all the money and spend all the time and, try these things in court, we still, and even if we get a ruling, it might not even be a ruling that is useful, right? So that is not something we can hang our hat on. We've got to act otherwise, which I think is really what you're saying here. We've got to get that sensible middle out here. And I mean, I agree. I think that's very, very clear. I think you could get pretty much the biggest anti-crypto consumer, maybe not the biggest, but the right in there on the 21%, right? Not the bottom 10, the 11% or not the 10% that just is a ban hammer. You could get that consumer protection advocate in a room with a libertarian anarcho-capitalist and probably come up with something that makes a lot of sense. I think so. I'm hoping that what I like about the new McHenry Thompson bill in the House is that it's by committal. Is that a word? Right? It's House Ag and Financial Services getting together, which is rare actually. I would like it to be bipartisan, but I think they'll get at some point. This is a discussion draft. At some point, when something's introduced, they'll have bipartisan co-sponsors. There are actually plenty of progressive Democrats that are interested in crypto, right? I'm not going to name a bunch of, politicians right now, but like there are some in the House Financial Services Committee. There are U.S. senators who have spoken positively about crypto, obviously. There's several that have their name on bills that are positive for crypto in the Senate, right? So I like it because it's so in depth. They've really just taken a swing at like every question, right? Like, and so now there's something. It is the definition of discussion draft, but now we've got to. You're right. It's just so long. It's such a long bill. I had just finished reading it. Somebody had a great meme, Ryan. It was like because it came out like last Friday or something, and it was like lawyers like just finished reading the 162-page bill, and then it was like the 140-page Binance like claim drops on Monday, and it's like that meme where like the face is like hollowed out.
Melted off, yeah.
I think it's our duty now though to really get out and speak at this point. I mean, you're right. The industry, we can't just sit back and let this thing play its course. Like we've got to get on the field.
Now, so it never really went anywhere, but I had actually spent a bit of time with like the Bitcoin policy groups,
Right.
a year and a half ago, trying to come up with like a 2-line pledge similar to the Americans for Tax Reform pledge, the famous Grover Norquist pledge, essentially like no new taxes.
Yep.
And it was very simple. It fits in a tweet, but it's essentially, the right to hold and use Bitcoin and digital assets won't be infringed upon.
Yep.
And the right to the development, contribution, and just general innovation around Bitcoin and digital assets will not be unfairly impeded.
Yep.
Right? Two very simple sentences.
Pretty fair statement, yeah.
Fair statement. A lot of things you need to work out around that, but going to the two questions that we just spent a lot of time on, the one where I do think it's like a hard line in the sand. If you're saying we can't own Bitcoin, like middle
Right.
finger time, right?
Right.
And like we're going to go to war because this is a constitutional protected civil liberty that we have for people to like own their own property. And so, yeah, like we're going to have a problem with that if the government just pretends that the Constitution doesn't exist because it's inconvenient, right? But the second prong of that, like unfairly impeded, is open to a ton of interpretation, right? So that's the second question of like, okay, what should be the market structure regulations? How should we think about like assets that aren't quite decentralized, that have been issued, where you've got a company or you've got a team that kind of starts this? What are the oversight rules there? What are the rules? Like, should we have safe harbors? Should people have to basically register as public companies? Like, those are the things that get worked out in the legal process, but they're not necessarily constitutionally protected. It's like a delegated authority to Congress or the states or however you want to define it, where they're going to create the rules, and we need to be engaged in that process because that's sensible for the state to have some say in how we think about these new assets. Given that we already have commodities laws, we already have currency laws, and we already have securities laws. We're clearly going to have digital asset laws. So what do those look like?
Yep.
Those are two related but very different things. And I think the tolerance threshold that we should have for government oversight needs to be more reasonable in the second bucket than in the first, right? The first is, if you're telling me I can't own numbers in my head, we're going to go to court, like, and we're going to fight to the death on this, right? Because this is like it's a constitutionally protected right that people have to property. If it's, I want to be able to trade, meme coins and airdrop, assets, and then have them listed on a secondary exchange and speculate and day trade on them and trade futures on them. You have to assume that there's going to have to be a legal conversation and there's going to have to be some oversight of those markets, because that's just the way that the world works today. And generally speaking, people are very much against government unfettered surveillance and like their right to seize your property, but they're also very much for some light touch oversight of financial markets so that you don't have mass exploitation of people that don't know any better. And just either theft or market abuse or whatever. I think we have to just be like thoughtful and realistic about what do most Americans, what do most people want to see when it comes to laws in their countries and particularly like financial laws. And I think it's a pretty clean split along those two issues. And very often they're getting muddied and all of crypto is getting thrown out by the progressives, and the hardcore libertarians are saying everything should be legal and like let the market decide, and in practice that's led to a lot of bullshit the last couple of years that has really set us back in terms of trust, in terms of public sentiment, and it's just not good for society, right? Like, it's not good to have stable coins blow up. It's not good to have rugs for meme coins and then just kind of laugh at people for being idiots. That's not how you win long term, and it's certainly not how you kind of bend society in the right direction. Not to mention how are you, like, we're worse than Wall Street on some of those axes. Like, do you want to be affiliated with a tech that's worse than Wall Street? I don't. And I think some of that is washing out now, and that's a good thing. But now's our opportunity to stamp it out definitively with common sense frameworks.
Love it. Hey, Ryan, before we wrap, tell our audience where they can find you. Obviously, by the way, Messari.io I've been using for years. Great source of information and data in the cryptocurrency markets. Tell us where to find Digital Freedom Alliance.
DFA, the new org that launched this week, is Join DFA, as in Digital Freedom Alliance, joindfa.org. You can find out a little bit more information there. This is a complementary advocacy group to the coin centers, the DeFi education funds, the blockchain associations of the world, but we're very much focused on PR, narrative developments, data-driven kind of research and messaging campaigns that are going to move sentiment in DC, that are going to move sentiment in key congressional districts, and just tell a better story in the aftermath of FTX and all the setbacks that we've had from a public awareness and public relations standpoint the last 6 months especially.
Very cool. Ryan Selkis, thank you for being here. CEO, founder of Messari, chairman, and founder of the Digital Freedom Alliance. Thank you, my friend, for joining Galaxy Brains.
Always a pleasure. Thanks, man.
That's it for this episode of Galaxy Brains. Thank you to our guests, Ryan Selkis and Beimnet Abebe, for a great episode. That's all we've got. Big stuff happening next week, so pay close attention. Until then, have a great weekend. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.